Welcome to another stream. My name's Tony Darvall. I'm the head dealer at easyMarkets Sydney, and we'll be going over a little bit of what we talked about last night. If you missed that, we did a couple of trades last night talking about the risk rewards on being long dollar yen into the US CPI tonight. The US CPI tonight is probably the most important inflation read we've had for some time. I mean, each one has been important recently, but this one comes at a time where there's a big debate in the market going on about that inflation is temporary or transitory. All the central banks are pushing a narrative that it is very much transitory, and each number that we get that's very high, especially from the US, redirects the market's attention to the inflation question. And the skews are lately, anyway, every number has been coming out higher than expected. Tonight's number's pretty high in its forecast, right? It's, if we're talking about the forecast, you can see it here in the calendar. 5.8%, okay? And the core at 4.3. Now that's already a big jump from last month. And we've got to have to see whether this can continue on. But even a high number like 5.5 or 5.6, it's still high inflation, right? And it's easy enough for the market to then play that as a story, right? And the way they play that as a story is, well, the central banks are wrong, and we're going to start pricing in rate hikes next year in the US. And then what does the Bank of England rates do and the Australian rates do? They start to price in rate hikes, right? Because if the Fed's doing it, then Australia can do it. It's, I mean, you can't really have one country in the world these days that doesn't have inflation and the rest do. Not easily. Just one sec here. It's hard to see the stream clearly. If someone can reply back to that. Just to make sure there, because I can't stream and check the stream at the same time for some reason. It doesn't like it. I'll try right now. Also give some time to come in. For those of you who were looking at the day ahead, it was actually planned for 8 o'clock Sydney time. 7 o'clock is the open. I'll make sure I set the time right there. Had a bit of daylight savings going through, and so that one was a little bit off. But generally the start of the European session is where we're going to do this regardless of your time zone. So, during the winter months in Australia, this will be on at 5 p.m. rather than at 7 p.m. where it is now. But we'll go over that when there is a chance. When there's an exchange, which is not for a few months. Alright, so the dollar yen is a very clean way of playing this. And we bought some yesterday with a tight stop, talking about the risk reward of the market buying US dollar ahead of it, mainly because they've been selling US dollar beforehand. And if anything can change the narrative, it's going to be inflation numbers from the US, or bring back the yield increases. It's going to be inflation from the US. So it's natural for the market to bounce up. If you hold these trades into the announcement, there's a natural announcement risk. Yeah, and you can't really predict month-to-month numbers that easily. I mean, we can all think inflation's here, but we still got to play the market and the timing of it, and the timing of this release. It has to be very strong to really push the market back into aggressive bond buying, because the Fed and all other central banks have been saying, give it a little bit more time, the supply crisis will be worked out and the prices will come down. I mean, one thing which will change that whole story is if we get wage inflation around the world. They can't really sit on their hands and wait then, because you can't really drop wages after you've increased them, and that can create a cycle of wage push inflation, and that's very hard to stop without raising rates, causing a recession basically. Stopping the housing market, stopping everything, just so you can get inflation under control. And that's what they've done in the past, and we're very lucky as our generation not to have seen that. Not in the 20 years that I've been watching markets. We've been extremely lucky that we haven't had one of those big inflation spikes. But if you talk to your parents and you talk to them about what happened back in 1989, 1990, 1991, even in Australia, you had interest rates up 15, 20%. And that sort of thing, I mean, it's probably not going to happen like that, but even 5% interest rates right now would make most houses unaffordable in Australia alone. It'd be incredibly hard to get rates back up to even 5%. Now, in terms of the trades that we entered long dollar yen, and then we entered a short euro pound. All right, now the short euro pound is mainly because the 200-day moving average is held again, and it's in a long downtrend, and we just want to be part of it. Euro basically outperforming the pound for the last week or so, but it's got up to levels where it's a bit more comfortable, and now we're just looking for the pound to start its outperformance. On the euro note, the euro itself has been quite weak at the open here, and I haven't had a chance to check the stock market yet. I don't think we're going to see big things tonight in stocks. Inflation hasn't really run as a stock story. Okay, a little mixed. And Wall Street off lows, so a little bit of support coming through for risk, but nothing crazy just yet. And like I said, I mean, we'll see what the market does with the inflation numbers tonight, and see if that wants to create something for stocks. The stocks have been able to rise in we're going to keep interest rates low for longer frame of mind, and like last week, and they've been able to rise in the we have inflation, and rates are going to be going up higher quicker than expected. So stocks don't necessarily have this clean result that could happen tonight. Strong inflation is going to mean stocks down. If I had to pick, more likely that they could find a reason to pull stocks down on a strong number. But whether they stay down on the day is hard. Yeah. And so, where we are sitting right now on the euro, though, we're still close enough to that 115 level that it's still in the radar of everyone. So a strong number tonight could end up pushing the euro down here. That would help us with the dollar yen going up, but it's something to keep an eye on. We'd actually want the euro to fall and for the other pairs to be held up because it will help the euro crosses that we're selling. But in general, it's not great for the whole market if you're looking for like a pound rally or an Aussie rally, if you have the euro falling because it's such a big boy. Now, so the dollar yens are in profit, but the dollar yen should sit around here probably until the numbers come out. It might head up towards that 113, 20, 30 level. There is a little bit of a bounce in US yields as well going on right now, so this is helping. But it's really going to move once that number comes out, and I suspect 50-point move easy tonight for this particular number. So it is action. In terms of the Aussie dollar, and that was another trade. We were trying to sell the euro, buy the Aussie. Unfortunately, we ran into a bit of a problem in iron ore today, and iron ore has slumped now to fresh lows. And if we look at that order history, we got stopped out of that one. The good thing though about getting stopped, and I think it's 157, you can always re-enter a trade. Yeah, you can see the downtrend. You can try to sell. Yeah, I think we sold here. Got stopped. I mean, you can always sell again, and as long as this market doesn't actually go crazy higher, which is only possible if China contagion spreads and they hit the Australian dollar on because of this, and stocks fall, then any sort of stabilization in the market, and we should get that soon, will lead to that Aussie bounce, especially if stocks remain strong. And so it's just very hard for the euro to beat the Aussie over the long term. Okay, short term, yeah, it's possible, especially if the Aussie's weak, and the Aussie's very weak right now. Got to fresh cycle lows, fresh sell-off lows today. And if we look at the iron ore price, I wonder if we've got iron ore here. It's going to be anywhere that'd be in trading view. Iron ore. Okay, so at the high, iron ore was 220, and then it's fallen back to 91. And just so that I can get a little peace of mind, guys, if someone can say they can see the stream. In the chat area, if you can reply back. Just like I said, I can't check the stream. But that's a crazy sell-off. And this was one of the things the market was talking about with inflation earlier on, that and lumber. And now that it's back here, it's like, well, this doesn't fit the narrative very well. And it definitely hurts Australia because our biggest export is iron ore to China. And if you're looking at, say, oil has recovered extremely sharply. So it's not the problem. Oil's going to be the contributor to inflation and going forward. If oil drops, we can be more concerned about everything settling down in inflation and being temporary. But the OPEC didn't seem in any rush at all. TGM. Okay. The stream was working. It's streaming to YouTube at the same time quite nicely, but yeah, definitely it's not looking good on the... Alright, we're going to try and restart it, guys. And I will start the talk again. Oh, yeah. Alright, be right back.